Good morning, everyone. Happy Monday. How are we doing? Let's see. Can you guys hear me? Good morning. Good morning. Hey, Ian, Stealth. How you doing? Raj, how you doing, brother? How was the drive? Okay. So overnight inventory. One sec. Yeah, if the link doesn't work, it seems to be working. Try that. Alrighty. So overnight inventory was 100% long. You guys would have said we opened up on a gap because we opened up way above the close. And actually, we were above Friday's high for a little while. A little bit of distribution. We ran out of buyers, and now we're coming back down. So you can see the overnight low is getting really close to the close. So we are almost correcting inventory. Friday, we had a massive range, big short squeeze. Anyone who's short really under 68.84 is going to have a difficult time. I'd say anyone who's really short under 6,900. There's a little bit of a time and volume spent here at 69.33, and that's where the point of control is, where most of the inventory is priced from Friday. So I imagine we're going to come back into that area there. So that is something that we want to be aware of. Okay. And let me just... We'll go to our next chart. Hey guys who are joining us on YouTube, thank you for being with us. Get rid of this. So here's the overnight low is now, we've almost corrected inventory down to the Friday close. Okay, and we actually have some single prints to the downside, which means we have a little supply. What a surprise, right? So what these single prints here mean, when the market does this, it means supply is trapped above. So there'll be resistance at 69.50 and a quarter. As you can see, K opened, went right there, hit resistance, came back down. Now what we're going to do is we're going to wait and see. We'll use the 1 minute chart. Oh, little weekend brain here. Right, so my balance this morning was 69.56 and 3/4 to 62 and 3/4. So I'm using those lows, high, low. I'm off by about a tick here. let's see how well the levels work. So 2 times discount will take us down to 69.44 and 3/4, which is just a little bit underneath the close, right? Hey, Flow Zone Capital, welcome. So go into the Discord server, and in that Discord server, there will be, on the left-hand side, there will be a ton of like little sub rooms. So there's a JJ levels and commentary, videos, chart books, private coaching. It'll all be on the left-hand side of Discord. So when you go into the Discord, you can just DM me if you need help navigating it. And thank you for joining up. And for those of you who are new, probably not a lot at this hour. I'm JJ, I'm vwaptrader1 on X, and we are the Trading Syndicate, where we like to help people make money using common sense. It's okay, you know, if you're not used to Discord, it's got like little rooms inside the Discord. So trust me, 5, 6 years ago, I didn't know how to get around it either until I had my own Discord. So, so you can see, you know, we had that big spike up in M period, but it didn't hold, you know. And we opened Globex right in the middle of that spike, went up, did a bit of, you know, we got rid of some inventory, put it on sale, and I'd say everyone who's really trapped underneath that M low, this is a big area for you folks to be looking at tonight. 69.37 half, 38. There should be bids here. You're already seeing them because we haven't tagged the close yet. So when a market's doing this, the inventory is above us short term, right? And it's correcting down. So what does that mean when inventory is above us? When inventory is above us, that means there's resistance. If you don't know what inventory is, please come into our room at least for a month and give it a shot, because we'll teach you how markets actually really work. You know, instead of just blindly trading an indicator or a pattern, we'll teach you what creates the pattern. This way, and I'm not knocking technical analysis or indicators. In fact, I'm working with someone, they asked me to test an indicator for them. And I'm doing so and trying to, and I can see how people, now I understand, because I never used indicators before. Now I understand how people go wrong using them, because they don't use them with the business in mind. They're just blindly following the indicator. But if you actually take trades from the edge, your indicator is going to help you a lot more than it currently is. So we'll get to that. I'll be doing sessions on that. It's the proper use of an indicator, because a lot of people just simplify it and then they get a lot of false signals and then they overtrade. So I'm learning. Really learning how to teach people, you know. And you can see, look, when a market hits an area where there are unfilled buy orders, because people are short here, so they'll have their buy orders to cover, and the market will see those buy orders and it will lift the offer. That's why we have not been able to tag the close of Friday. It's kind of interesting. Now that's the business reason, right? If you understand the business reason why something is happening, you're going to have a much better understanding of why you're putting money to work and when. Otherwise, what happens is it's very easy to lose your way in this business. It's very easy to get caught up in things, and then emotions start to take over once things start going upside down, right? So what I'm waiting for here is I'm waiting for the market to put in a low. Now check this out. These are what we call single prints. It's a market profile thing that shows there's a distribution above us and there's a little distribution here. And those distributions are separated by what we call single prints. Now, what that means on the way down, this is an area of supply. Okay? So this tells us a lot about the market. If the market can't get up over 50 and a quarter, that means that the supply is quite heavy. But if the market starts moving into this red box, it means it's running out of supply underneath 49 and a half, 50. Because think of this like a storeroom, and it's got ES contracts in it. So when the market runs out of ES contracts, it's going to go up into that storeroom to get them. So if you're a short seller, right, say if you were short, had you shorted here at 54, your ultimate target would have been 44 and 3/4, right? Or even the close. But what if the market doesn't get down to the close? Are you going to give back all your gains? Or are you going to book your profits when you see that? You see how it's going up into the red box? See, look, it's the market has run out of supply. That's why it's going into the storeroom to get it. Makes sense? You guys awake? I know it's Monday. Can you guys hear me in the room? Everybody there? Hello? Pink Floyd, is anybody out there? Just checking. All right. All right. Hey, Dave, how you doing, brother? You're in? Okay, good stuff, trade maker. Yeah, YouTube can be finicky sometimes. Hey, Blade Man, how you doing? Yeah, I don't really give much that spike right now, Raj, because we see if we had closed above, had we closed, see, this is the thing with the spike theory, right? This is what they don't tell you, right? There's the spike, but we closed underneath it, so the spike is kind of, it's not so relevant. Had we closed up here, right? Had we closed up here at say 69.63, right? Then the spike would be more relevant. This spike is just a huge short covering spike. All that is after, before the close, everybody comes into cover and they just jacked up the prices because all the inventory's underneath 69.43, right? So yeah, you know, big price spike up, but it didn't last because they sold into it, right? They sold into it. So there's still a few little contracts up here between 52 and 3/4, 53, right? Yeah, see that this is why market profile, and I'll be talking about this over and over again, right? The price probe or the price spike, right? From 69, what was it? 69.52 and change, right? It's not valid because we closed underneath it. Right? So all that is, see, and this is why people need, this is a really good question, Ian. Thanks for the comment. People don't understand how markets work. And this is what I really try and teach them. And how could they? Because they've never traded professionally, right? Yeah, that's just shorts covering for the weekend. That's exactly what it is, Jiraj. And trust me, they sold into it. Why? Because look where the point of control is. All your inventory for the day is down here underneath 69.38. So if somebody showed me a bid at 62, you're filled. Somebody shows me a bid at 59, you're filled. Somebody shows me a bid at 55, you're filled. Right? I'll sell this thing all the way down to 35 and I'll still be in money. Right? Exactly. If buyers are willing to pay higher, right, you will see this red line, the offer move up. This is a great learning lesson for you guys right here. Right? On most of this software, right, I have something called the bid-ask indicator, right? And you look to the left, you can see the sellers are here, 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 here. 4 candles with the exact same high, right? Look where the market stops. To the tick, right? So you know where the sellers are going to be, right? So if you go long, say you had gone long at 49, you knew there were going to be sellers at 52 and a quarter. Sell, right? Unless you're a larger trader who's got more money and can hold the trade longer, right? Then you'd be looking for 69, 56, 55, right? But if you were long 48, 49, why not take the 3 points? If inventory is above us, generally it's the look above and fail because there's supply. Inventory above us equals supply, which equals resistance. But this market is a little freaky deaky, Rocky. The problem is with this market is keeps trapping people short. So you could see, number one, what's the, like if we were like Inspector Clouseau, right? Or if this was Clue, what are the clues that there's a short position? Well, number one, we couldn't tag the close of Friday, right? Number two, we just filled the single prints, right? So in a market where the inventory is above, we're supposed to have a lot of resistance, but we're not getting as much of resistance as we should get, right? Now I know this stuff is kind of persnickety, but these are the devil's in the details, right? I'm watching the sellers. Jiraj, I'm always watching the seller because I used to be a seller. And the seller sets the price according to how many buyers come in the market. So if they see buyers, they're going to raise prices. If they see buyers are leaving, they're going to lower prices. What's my long-term view? Oh, good question. Stay with me 1 second. I should have gone to the daily. My long-term view is that we have a massive rotation between 68.07 and 69.89. The market's just going back and forth in this area. So if you were a balance guy and you drew a box here, you double that box to the upside for breakout, and you double it to the downside. But you could see that we're just going back and forth, right? Now, I told you guys at the beginning of this year that this is going to be a speculative market, right? Because of all the uncertainty, right? These markets are very speculative in nature, which means you should manage your expectations. It's hard to be an investor in this market, right? If you're an investor, you want to wait until you get the lowest cost basis. So you try not to buy the highs. That's why we do these balance levels. So you can say, okay, you know what? I'm buying, like I don't have, say you're a silver investor, right? Say you're buying silver for a longer term. The cost basis on silver is $26 to $34. This is 2 times, 4 times, and 8 times cost basis. So the trades that you would want are when it looked below 79, failed, and popped back up, right? Like it did here. But you know that there's going to be sellers here, so you sell into it, right? For swing traders, right? But for longer term investments, I would suggest using my balance levels and trying to get in and be patient and wait for a big sell-off. My longer term view on the market, because I'm not a macro guy, I really think, what was our high tonight? 69.80? 30 points away from all-time highs. Every time this market liquidates, what it does is it liquidates out all the margin longs, people who bought with borrowed money, takes their product and rams it higher and traps shorts. So I would not be surprised. And the other thing is, we had a look below and fail of 67.88, which means rotation back up to 70.30. And we're only 30 points away from that. I called out that trade at 2 o'clock in the morning, New York time on Friday. Right? Had you been long, had you followed me and taken that trade, you would have been long maybe 68.80, 84. Had your stop at 74 for larger accounts, and that would have been a pretty profitable trade. Right? You could see the sellers are right where they're supposed to be. And this is not a market that's acting like there's a whole bunch of supply. Once we get up here, there's going to be a bit of resistance. So that's how you manage your expectations. If you're long and you know where the resistance is going to be, like I said, had you been long 69, 49, 50, and you sell a little bit here, you put your sell orders in as the market goes up. So you're not chasing it, and it takes you out of your position as the market goes up. Okay. So we found the bid this morning, right? We found the bid. The bid is 69.47. See, look. See how we tag that level right to the penny, right? And that's something chart books will not tell you. That's what charting people will not tell you that because they've never sold size, right? In order to understand how the market works, you have to understand how size traders trade. And that's not using software like Bookmap and things like that, not to disparage them. But the people who use those programs have never traded over 500 shares in their life. So how do you know how someone trades 1 million shares if you've never done it? I have. And the reason why they're selling right where that white line is because they have inventory there, and the top of the candle are where the sellers initiate. So this is how you can use your brain. If you're long 51, you know they're going to be sellers at 55. Sell a little bit, right? Watch, we're going to come right up to this next area here. See? And if we rip right through it, it means that there's a big buyer, right? So what happens in this market? First, short sellers come in and cover. You guys might want to write this down. Take notes. The short sellers come in at the lows. Wholesale builds a position above them. Okay? And then we come in and start buying. Now, this is the smart money shorts. These are the wholesale longs. This is retail. Now, the fourth set of buyers who come in and make that big push, they're the dumb money shorts who shorted here, averaged up here, averaged up here. By this time, they're like, oh, crap, we got to go cover. All the inventory is secured underneath 69.52, and boom. That's when you get that big green candle, right? And I told you as we came up to this area, there would be resistance. There it is. Pretty simple, folks. How do you trade it? Well, if you were buying in this area, right, say you would put a position together at between 48 and 52, you sell, say you bought 10 contracts here, sell two, sell two, sell two, sell two, right? And just sell them on the way up. You let your executions tell you whether your trade is working. Make sense? So right now we've done a little look above and fail at 56. So if you're short, say 56, 55 and a half, well, your danger zone is here and your exit is here and you're looking to cover at 52 and then down here at 51. Does that make sense? And you use your orders to tell you how things are going. right? So if I was short 55 and I had a 52 buy order, it's not getting filled. Pay up a little bit, buy 52 and a half, 52 and 3/4. See? So everything we do at Trading Syndicate is based on common sense. See? The thing is, in trading, we have to sell where we can, where we have to cover where we can, not where we want to. Does that make sense? And once you get that into your head, like you might buy something at $5 and want to sell it at 10. But what if it only goes to 8? Are you going to sell it? Are you going to sell it at 8, or are you going to hold on until it comes all the way back down to where you bought it, and maybe even lower, right? It's hard, but you have to understand it's a business, and you have to think like you're a business person. You can't think like a gambler, and you can't think like someone who's wishing. So you have to use tactical, intelligent business reasons to get in and out of trades. I hope this makes sense. See, right now you can see that there's a seller right there, right? And remember what I said, the position's under 52, that's why the market stopped selling off at 52. Now, if the sellers get desperate and need the lower price, what are they going to do? They'll put it on sale under 52. London's going to open here. Let's see what happens when London opens. Usually when London opens, it trades lower to get cheap inventory. Let's see if that happens this morning. There's London opening. I wouldn't trade this right here. It's not at an edge. London can't get lower, it will rotate above. See? It'll rotate higher. There's the rotation. 56 and 3/4 print. 57. can see where they're going to sell into it. Another look above and fail at 56. Let's see. If you are shorting this at 57, 56 and 3/4, 56, I'd be looking for bids at 55, 54 and a half. Eh, 55. See? I promise you folks, if you spend some time watching the 1-minute candle chart, it will change your life. Especially those of you who aren't consistently profitable. Because you'll be able to know where the sellers are and where they stop selling. And that's all you need to know as a trader. See how the market comes down to 54 and a half and the offer starts to lift. Everybody see that? Now, if the offer goes under 54 and a quarter, then you know the sellers are competing. Right? Why would sellers compete? Well, they're all selling the same product and they need to lower price to turn that product into cash, right? It's just like a store. That's why they call it a market. See? Why couldn't it break 55? Well, there's support there. Exactly. So they don't need to sell it under 55, right? If you had 1,000 contracts to sell, would you rather sell them at 57 or at 55 or at 54? Think about it. Have a think, right? If you use the thinking part of your brain when you're trading, not just blindly following a pattern, right? If you understand the business that's taking place, and don't let anybody tell you that this is random, because people who tell you stuff like this is random, they're lying, right? Well, they're not lying, they're just misinformed, which means they don't understand what's going on. That's why you say something is random, because you don't understand the mechanics behind it. So if you are long, these are places where you're going to see resistance, the top of these candles. There's going to be inventory, right? And we're right back to where we started. So I'd say the shorts are still trapped underneath yesterday's close, right? Because every indication so far now tells us that that's the case. See? Now you can put some intelligence to your trading, right? Once you understand the mechanics of what's actually going on, it's going to make your life a lot easier because you're going to be able to trade intelligently instead of being trading blind. Watch that 60 and a quarter area. Do you see how they're selling before? 5 p.m. I use the 5 p.m. close because I want to know where every last contract is. So I'm an inventory guy, Plate Man. I want to know where they put all the inventory. And see how well it works. You use the 5 p.m. close. The market can't get down to that 5 p.m. close. That is proper information, right? So because we couldn't get down to that 5 p.m. close, we know that the shorts are trapped underneath it, right? It's so handy. See, the reason I use that extra hour is because the extra hour is where like you guys don't trade that last hour. You guys don't trade 4 to 5, but the size traders do. The size traders do. So I want to know where they stashed all the goodies before the end of the day. You know what I mean? Where'd they stash all the donuts before the close? That's what matters to me. So now what happens? Now we look to see, did we trap enough shorts on this move down where we can take a run at the previous day's high? Because once the inventory is below us, we're going to go take it up and sell it. Look at that. VWAP is your destination. If you are long on let's say the 68, 69, 57, 58, I would be a seller here at 62. Let's see if the zones are working, if 62 and 3/4 works. No problem, Tim. Glad to be helpful. Glad to be of use. Have a good one. Good start to the week. Boom. Oh, someone's short. See what I mean? That big green candle where we just ripped right through VWAP. Yeah, I know. Right? That's somebody going to cover. Oh, I better cover before VWAP. Whoop. Lifted it all the way up to 69, 68. Now let's see if we rotate down to 56. That was one big order. Now we're creeping up on VWAP. Let's see. Where do they sell into it? Well, you could just tell, right? I've been doing this for 34 years. So you could tell when they're trapped, right? When first clue, right? First clue was here. Not able to transact a low. Second clue went right through the single prints like a hot knife through butter, right? And then the move up from K from 57, like so quickly, right? You can see bid, 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 right? Taken bid, taken bid, taken bid. Not hit an offer, right? So large traders take the offer and bid, take the offer and bid, take the offer and bid. And that's what's been happening since 65.50. Take and bid, take and bid, take and bid. Now, we're going to go back and forth over VWAP and clean that up. And let's see what the next order of business is. Rotation, folks. These markets are all about rotation. Rotation of what? Inventory, right? Once you realize that the chart that you're looking at is nothing more than a sales chart, it's telling you how sales are going. Half-hour chart, sales by a half hour. 5-minute chart, how are sales doing, on a 5-minute interval? That's all it is. It's just a sales chart. Tonight's sales are pretty good. When we had a sale, when we put the price down underneath 69.63, underneath 69.50, we brought in buying. Right? Just like when Walmart lowers the price of a $1,000 TV to like $600, everybody comes in and buys it. See? It's just sales, my friends, just sales. And it'll go back and forth here around VWAP. If we get any serious selling, it'll break the 60s and come back down to 56 and 3/4. Right? Just the rotations. That's all we're doing. Just rotating markets back and forth. Any questions? Yeah, a little bit better, Dave. Thank you. Aren't you? You're on the ball this morning, trade maker. Lots of coffee. Comments or insults? It's okay. Go ahead and insult. Yeah, it's a bit. There'll be some good trading this week. There'll be some decent trades. There'll be some decent trades. Anyone else? Man, you guys are quiet this morning. Was there like a big soccer game last night that you guys all? Oh, Super Bowl. Ah, everyone's hungover. Okay, now I know why everyone's dead. Okay. Well, you guys were up late watching football. I missed it. I can't stay awake that late. Not anymore. That's why everyone's like half asleep. There we go. Back down. There's a seller at 62 and 3/4. I was wondering, I was like, you guys are like dead this morning. It's like, is there a pulse? Real football. Exactly, Jiraj. Oh, let's see where we rotate down to. Nice work, trade maker. Nice work. Stop right above it. Beautiful. Put a bid down at 60 and 3/4, 60 and a half. See if you get filled. Nice. Good, good, good. Pretty much, eh? Right where the previous seller was. Yeah, it might be a little choppy here. Every time we come back to cost basis, it gets a little choppy. So everyone's going to be hungover today in RTH. Okay. Are Super Bowl parties still a thing? I don't know. I haven't been to one since the last time the Seahawks won the Super Bowl. It's been a long time. Found some bids at 60. It might be a little choppy and slow night right now here, folks. Let's see. All right. So always mark off where your sellers were before. Right. That way you'll have situational awareness, right? It'll help you manage your expectations and manage your risk, right? Yeah, and just a little bit of commentary on what's going on in this market. You know, let me just go and get rid of all. If you look at this thing, You can see every time that we have a liquidation, you build a cost basis, back up to sell it, and look, we came right back down to cost basis, right? Distribution, right back down into cost basis. This is the first time we broke the bottom of that cost basis. But when we did, man, the buyers stepped in, right? So here we are right back again. There's that 70-30 level. Inventory is 100% long. We've had a little bit of a correction, but we haven't had a serious correction to overnight inventory because we have to break Friday's close and the market to come down here. But we haven't been able to do that because the shorts are trapped here, right? It might happen closer as more people wake up, more sellers will come in, right? We're seeing a little bit more selling now. So if we get under 60, look for the market to rotate. And that's the beautiful thing about these balance zones. They rotate up, they rotate down. If you can get a nice rotation like that going, you can take shorts here, put your stop here. You can take longs here, put your stop here. Right? Don't trade in the middle of it. There's no reason to trade in the middle of the zone. Just wait for the edge. The edge is where you get the best deal. You can. You can take failure to look below, definitely. Definitely, Sam. Right, so if the market gets here, right, you got to be a little quicker sometimes. If the market comes here and stops and can't get underneath 56 and 3/4, you can go long, put your stop here, and then sell into strength. Now remember, Friday's move, right, before I leave you guys today, Friday's move was a short squeeze. Okay. Now what does that mean? That means it can, the last time we had a move up, remember we had a move up all the way from 69.03 all the way to 70.13, and then it came all the way back down. Right? This market is a speculative market, which means don't trust it. Right? The ranges are huge. If we break the close, be careful, because if you break the close, you're going to have inventory long above it, and that selling will compound, and it'll start taking these lower levels. So beware of that. Just because it's up high right now, it doesn't mean it's going to stay up there. As New York wakes up, short squeezes are notoriously unstable. It's like building a house on stilts. All it needs is a little bit of size selling. As soon as the short sellers who are trying to buy it back, they see a bit of size selling, they start dropping their buy orders. When they start dropping their buy orders, everybody runs away and the market starts to move down quite quickly. So just be aware of that. I'm not saying it has to happen, but I'm just trying to keep you guys situationally aware. Hopefully that makes sense. Right? Keep your head on a swivel this week, my friends. Right? Don't take anything for granted in this business. ever. Okay? And always protect your capital. That is the most important thing. It's more important than making money, right? It's more important than glory. The most important thing in this business is to protect your capital, right? That's why we recommend those of you who are trading, who are just starting out, to use those funded trader accounts, right? Because, you know, it takes a while to know what you're doing, right? Yeah. Cash is a position. Don't deploy it until your setup is present. Let me add to that, Raj. Yep. Right. And when those conditions are present, you execute ruthlessly. Yep. That's pretty much it for me this morning. Come visit us at the Trading Syndicate. Those of you who are on YouTube with me, appreciate you guys for being with us at this 7:30 morning. We'll be back at 9 a.m. Eastern Time for the New York Open. Thank you, everyone. Have a good morning, and we'll see you at 9 a.m. Thanks, folks. Bye for now.